Hello, and welcome to Virtual Investor Conferences. My name is Matt Lateplo, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Global Atomic Corp. Please note you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Tim Campbell, Vice President of ESG and Secretary, and Bob Tate, VP of IR, who will be joining us for the Q&A portion of this presentation of Global Atomic Corp, which trades on the OTCQX Best Market under the symbol GLATF and on the TSX under the symbol GLO. Welcome, Tim and Bob.
Thank you very much, and welcome everybody here this morning to the Global Atomic presentation. As you know, we're active in Niger with the Uranium project, the Dasa project, and we also have our zinc recycling operation in Turkey. Just moving forward here with the disclaimer, usual disclaimer regarding future-oriented statements. And here with the map showing you that we're based in Canada, of course. Headquarters is here. Operations in Niger with the Uranium project and the zinc plant in Turkey. We have going to focus on the Dasa project today, of course. It's the only greenfield uranium project under development today. This is a picture of the opening blast ceremony about a year and a half ago, the end of 2022 in November. At this, what you're looking at there is people who came from far and wide, area residents, villagers, government representatives, etc. So it was a big day. It was the first new mine in country in a long time, and we've since that time we've advanced quite a ways, which you'll see in some of the pictures as we move forward. Just looking at the map here of Niger now, I'm going to make an assumption that everybody on the call listening in today is aware of the change in government roughly almost a year ago in Niger. Certainly that the coup there has led to some changes in country. But as far as we're concerned, it's business as usual. The government themselves, we're in regular contact with them. Of course, the Mines Ministry of the various groups and entities that would ordinarily be coordinating with a mining company like ourselves, nationally, regionally, and locally. They are 100% behind what we're doing and impressed with the way we're doing it. And very appreciative, I think, of the number of jobs that are currently on the ground there, and 98% locally filled. So they're roughly 250 people, maybe close to 300 with rotations. This will increase to as many as 600 people during construction, and then probably level out something in the neighborhood of 450 people. So again, this is welcome news for the government. It makes a big difference in a country like Niger, where these good long-term jobs are not necessarily easy to come by. Moving forward, global at a glance. That's a picture of the camp as it looks like today, and there's give you an idea what the country's like there where we are. This is the highest grade deposit outside the Athabasca Basin, and of course, one of the things that we're keen to work towards here is to bring our project financing to a close, rather to define it, which we hope to do by the end of this current quarter. That's we've been working with development banks for probably 2 years now. Of course, the events in country have slowed things down a little bit there, but we believe we're on target there to wrap things up at the end of the quarter. The offtake agreements, it's important to understand that the Global Atomic, we've written offtake agreements that represent roughly 30% of our production going forward for the first 5 years of the mine. Remember, we're a 23-year mine life now. But the purpose behind the offtake agreements is to provide us with the ability to pay back the project financing to build the project in the first place. So this is good, just good business, and it's a requirement of project lenders. But it's important to understand that that leaves 2/3 of our production available to sell into an increasingly tightening and uranium market. We think that's going to feature higher prices as we move forward. Moving the next slide here. Going back, say, 4 years by now, this was a mineral resource estimate that we did in 2019. It gives you an idea of the extent of the project here. We had initially focused on the top little corner there, the phase 1. And since that time, we did quite a bit of drilling to increase the size of the mine plan. So I'm just sorry, I was hitting the wrong button there to advance. Here we go. So again, 2019 on the left-hand side. So if you look at the blue versus the yellow, the difference there, this is the geologists. What they'll do is we'll go in and we'll drill off a deposit, and the area in blue is on a tighter drill center. So the drill holes are closer together than they are in the yellow area. So what that means for a mine plan is the material in the blue is included in the mine plan, but the area in the yellow is not, because it's just not well enough defined. So what we did from 2019, we spent 2021, 2022 drilling out 16,000 meter drill program. It's a pretty big drill program. We focused it in that area. The middle area on the left you see was yellow, and now you can see on the right hand side on the 2023 mineral resource estimate, it's blue. So that was why and how we were able to increase our mine plan, the mineable reserves, by 50%. Looking at the table here, you can see again, we'll just zero in there on the rows that are shown in yellow. And you can see that we've taken our indicated material there from 73 million to 109. So that's the progress you want to make, and it led us to this feasibility update here in 2024. Look, maybe the key takeaway here is that the after-tax net present value with the 8% discount rate, $917 million US. So that's about 1.2 billion Canadian, which is a long way away from where our current stock price is. So that I think should be a good indicator of where we're likely to go over time. The after-tax IRR at 50%, 57%, that's very high, and it certainly attracted the interest of project lenders and others always interested in our project. Highlights on the feasibility study. Look, one thing we like to do when we run a feasibility study is we like to pick a conservative number for the revenue number, I mean to say. So for the uranium price, we use $75. It's more like $90 these days, with a high towards that 105 on the right-hand side there. So we ran it at 75, and you can see what the numbers are. You can also see what happens to those numbers if you plug in $90 or even 105. So we don't know where the market's going to take us, but we do know that this is a 23-year mine as it currently stands. And that's based on running it at just 1,000 tons a day. Now, one of the things we're going to do when we move forward here and get under production in earnest here, which is scheduled for Q1 2026, is we'll do another technical report, which will look at the utility of and the all the nuts and bolts of moving from 1,000 maybe to 2,000 tons a day, which would simply allow us to mine everything quicker and improve the return on the project again. Some of the highlights here again. I think what you want to sort of look at here is that we've been able to maintain very good grade here going forward. We've broken it up into sort of thirds, if you will, but that's give you an idea of how the financial metrics move around as we move through the deposit. You will notice towards the end there, 2041 to 49, that the grade drops off, the costs come up a little bit. Well, what we are pretty confident is going to happen between now and then is the same sort of drill program that we did a couple of years ago to increase the mine plan from where it was in 2021 to where it is now. We think we'll have a similar success there, and we'll be able to make that part of the mine plan just that much more economic. But I mean, it is economic today, but we just like to do what we can to improve as we move forward. So that's sort of a little bit of a foreshadowing there, I guess, the value opportunities here. I mean, look, the big ones are to do some more drilling and to look about increasing the throughput. But what you're looking at there right now is the current production profile there. So yes, if you add it all up and you run it out, it's probably something in the neighborhood of 2.5–3 million pounds. This is just a quick look at the estimated capital costs. Now, again, we have all of these numbers, of course, are on our website. Excuse me, where the technical report is in its entirety. But so some of the takeaways here are that our costs have really not gone up too much from where they were in the initial go round, which was interesting. Some of the big drivers of that, of course, were that we're mining more material, sort of over the same amount of space, if you will. So it drives its own efficiencies. You'll notice the contingency in there as well. So we spoke about it a little bit earlier there. We've been working with a couple of development banks. We anticipate that we'll see the loan terms here shortly, end of Q2. What they'll do is they'll lend a certain amount, and they'll look for the company to make up the balance in equity. Be about 2/3, 1/3, but it's important to remember that we've already invested roughly $85 million into the project, so we get full credit for that, and it's good to keep that in mind, because whatever equity does come along beside the project finance loan will be much less than perhaps a lot of people are thinking. So it'll come in the form of combination of equity, but also we're hoping to put alongside a prepay agreements under additional offtakes. So now we're looking at a couple of pictures of how it looks today. Now, what I would say is that make sure that you understand that we're sort of starting the one in the middle here. I don't know if you see my cursor there, but that's a tube going in. That's delivering air underground. Now that's a temporary arrangement that will be replaced by excuse me, air set up from coming back, pumped down from above ground to underground, which we're just about to start drilling that. It'll be a standalone facility, pumping air in on the one side and then out on the other. So just in case you're wondering about that, on the left-hand side, you're looking at the ramp. This is up above here, just as you're going in. That's fully paved. We anticipate this will be in use for a long time. Of course, one of the mining machines there on the right-hand side. We're 1,000 meters down the ramp right now, so that's quite a ways. It's a kilometer. Stateside there, I guess it's about half a mile or something like that. There you go. Some action shots there from a January site visit, January of 2024. These underground sites. So again, you've got the air going down and coming back up, and so that's got the machine there on the top right there, the Boltec. So that's actually drilling holes and that's how they make how they move forward with it all. Let's see where we are here now. Just a picture of construction of new housing in the camp. The camp is going to be to be able to house 500 people roughly. We're just got a new brand new camp being, it's on its way to our site. We hope to be, taking delivery of that. Excuse me. Within the next 3-4 weeks, and then building it up. So they all, it's prefab. They sit on a concrete base, and it's all, it's all air conditioned and as good as it can be for our staff moving forward. Some of these machines you're seeing, they're all brand new, and again, the guys have been working on that since November 2022. Catalyst moving forward to uranium deliveries in 2026. Well, at 24, you see what we've been doing. The development is full on. In 2025, we'll hope to complete the construction, of course, of the mill, the camp, and get everything ready to start up commercial production there at Q1 2026 and start making deliveries under our offtake agreements. Of course, we're going to be continuing to infill and do expansion drilling. The deposit at the moment, as big as it is, and it's got room to grow. It's on strike, so at either end and at depth. And then, of course, the infill is what we looked at earlier, where we're increasing the drill density and upgrading that part of the deposit and getting it to report into the mine plans. Looking at a picture here of the camp again, and you can see that the camp is in the foreground, and then you can't see the mine site. It's 4.5K, a little bit beyond there. But just talking a little bit about ESG initiatives since 2008, excuse me. It's good to remember that we've been in country since 2008. It's a long time. And since that time, we've really touched on most things that you would anticipate we would, and working in the area. So you go down that bullet list, and you can see it. You can see various things. We have a very active consulting program which reaches out to a circle from the camp. It goes out 30 kilometers. And within the 30 kilometers, there's numerous villages, probably 24 anyway. They're not necessarily huge villages, but they're there, and people live in the area. And of course, we've been engaged with them since day one to an increasing depth. As we move forward, as we do more on the ground, we're able to do more. For the people around us, but food during the drought, water wells are obviously very important. We've drilled many, we've improved others. When we talk about infrastructure, what we're talking about there are water, are tanks, and that piping goes along with it, and of course the solar powered. Power that actually runs the pump. So we put all that in. It's a unit really, and we train the people on how to run it, how to maintain it, and of course, if they run into trouble, they give us a call, and we head on out and have a look and fix it up. One of the things that the local population has been very, very happy about, and eagerly looking forward to, is the opportunities for jobs close to where they live. And so what we do is we prioritize local, first of all local, and then regional, and then finally national when we're hiring. And that goes for hiring people direct, but all contractors, and also procurement, sort of goods and services. This is one of the things that has been really something that we're quite pleased with the results there. We've been able to take people in from close by and train them up on using, for instance, various machinery, bits of machinery we have there on site. and we've actually graduated a couple of fellows to be able to run the underground machines. So, there's a big deal over there, and these are good long-term jobs, and we look forward to doing a whole lot more of that as we move forward. Again, when we look at the operations, we could talk, about royalty tax and fee income. So that's for the government. This mine will play a big role in providing income across those different buckets, as you might say, for a good long time. So, why that matters is that 50% of Niger's budget revenue historically has come in the form of foreign aid. So this is an opportunity to provide, their own income, and for such a long time it will withstand good long-term planning, and we can hopefully work with the government to leverage this into meaningful, programs, opportunities moving forward. So that's a lot of things that are already ongoing there right now. And then, of course, as we move forward, look, we look forward to minimizing our carbon emissions. One of the ways we look to do that is to introduce solar power combined with battery storage as to offset some of the power that we'll be getting currently from the grid, but of course backing up with diesel. So these are all programs that are either underway, in planning, or slated to get underway once we get in production. Again, just some pictures from out on site in the communities there. Bottom left there, you'll see that water tank there, water tower. We bought that, we installed it, and it's all piped in, and so you can see the people there were very happy when we were able to turn that on. Some consultation you see on the right-hand side there. This is things where people, at this point, since 2008, you can see, that's really quite a long time. It's 15, 16 years. So a lot of these people, we all know each other for a long time, and we go over and we talk about stuff, and it's not necessarily like you want to get something done necessarily. Sometimes it's just an update on where we are in the project and where the opportunities might be, and when they might be, particularly for the local youth and opportunities moving forward. I guess no uranium presentation would be complete without this slide. There is a supply-demand crunch that is really upon us. I think it looks to us as though it's really going to take hold here in the next year or so. A lot of the green area that you're looking at there, those are projects that are under development or planned mines. So, we know that sometimes timelines slip on these things, and so I would anticipate that the uranium market here that has done so very, very well over the last couple of years will consolidate here and continue to be strong. I'd like to just touch very briefly on our project in Turkey. Again, this is we have a 49% interest, joint venture interest with Befesa Zinc. Befesa is a big company, a big European company, which is a leader in zinc recycling and other metal recycling, particularly the leader in zinc. We bought this plant back again about 2008, 2009. We got it up and running. We then got in touch with Befesa. They came in as the operating partner, and together we moved forward and we redid the entire plant, made it state of the art, and so that at this stage it's a very efficient operation. It processes EAFD. EAFD is short form for electric arc furnace dust, which is a toxic byproduct. It's rich in zinc, but it needs treatment from local steel mills. And what most of these steel mills they're processing scrap metal. So this is a circular economy play here that where we take well, basically at the end of the day, we're producing a 65-70% zinc concentrate, and Bethesda sells that to smelters around the world. Biggest clients are like Glencore, people like that. So give an idea of what it's done for us over the years. Last year, they were hit with a couple of earthquakes. Of course, the price of zinc was low, so we were able to weather that storm. I think we've come back now to what we think are going to be more normalized operations, and we look forward to positive contributions over the course of 2024. Listen, we'll just go quickly. The board is very strong, especially along with the executive team, and then with the Niger management team. These are led by a fellow by the name of Musa Souley, who ran the underground uranium mine up the road, 100 kilometers up the road from us, which just closed after 40 years of mining. He brought along with him his senior staff, and so we are perfectly ready to go, and we really couldn't have any better of a team, I don't think, if we drew it up ourselves. So thank you very much, and I'd like to just open it up for questions. Bob Tate is going to join us here if we're able to activate the audio, and of course that's assuming there are some questions.
Yep, there are some questions, Tim. Can you hear me?
Yep.
Good. So a lot of questions, most of them about just how our talks are going with the banks. So what is the expected timeline? And do events in Niger, such as some of the discussions about the presence of the U.S. military, or issues like that, impacting it? So maybe you just give us a little update on our talks with the banks.
Sure. It's the conversations with the banks are ongoing. We have received confirmation that they wish to proceed, and that we anticipate credit committee and approval, and then by board of directors approval by the end of Q2. Now these dates have been pushed back a little bit. I think the Q2 is still a good firm date. And with everything that's going on in country, for sure, it's given pause to things, and they had to do a double check, and with their own government, of course. But interestingly enough, the U.S. ambassador was recently quoted after meeting with Niger government that they're looking to continue with the aid. U.S. aid is the biggest donor of aid to Niger. They have been for years, and they're involved in many projects and supporting excuse me, the Dasa project through an American bank, which is what it would be in conjunction with a Canadian development bank. It is really in the same ballpark of providing opportunities for good long run employment opportunities where people where it's focused it's not quite 100% focused on local population, but it's about as close as it can get. So that dovetails well with their overall mission statement, and we're confident of bringing this to a resolution here by the end of Q2.
Good. Another question. We've got about a minute left. Can you give your thoughts on some of the price fluctuation in the stock price recently?
Well, I guess I'd have to say off the top that we would prefer a higher stock price, of course, but we understand that with the geopolitical dynamics specific to Niger over the last 8 or 9 months, it's completely understandable that people get in and out of this stock based on headlines. And we are able to see things perhaps a little more clearly because we have been in the country for so long. We're in constant contact, really, I think, with the government in Niger, and we're satisfied with the road ahead and the commitment that the commitment and the enthusiasm that the government has today is the same that it had before the changes in country. However, we understand that the market is looking for confirmation of all that. And I think that, one of the things that's going to help is that the mines minister, with whom, we've had many discussions, he's on a tour of the mining area. So, that which will take him out to our site. We think it'll be this, as early as tomorrow, but this week. And this he'll be taking part in an opening ceremony of our earthworks, where we're starting off the work on building up the mill itself, if you will, in earnest now. So that'll be a very important symbol, I think, to many people, because people are rightfully wondering where the government is on this, and I think that'll go a long way to helping us with that. Is that?
Please hang out or press